Good morning, and today is Monday, October the 2nd, 2023. It's the first trading day of this week, and it is the first week of October trading month. And we can see that the pre-market volume is above 1 million share. That means look like we're gonna have a lot of activity for today. And you can see that the London high will take an Asia high, and you see that and then it go down to 6 quickly, but it stopped right there when it take the prior day low right there. So let's see how it react to this level. Maybe just check the sell side and it rebound, then we'll have a rally right here. But let's see. So it's good risk right here, and our target is gonna be the gap right here, the gap for the weekly open right there. So from here you go here, you reach 50 cents and $2. So I pass this. So we would love to go in right here at the best right there, and our target up here. You see the order block further gap right there. Right here is a little bit late, but let's see. Order block right there, you see, because the sales are agreed from previous day were taken. Let's take this. Let's So it's a long setup first, and we have a very good condition that it sell side liquidity. In this case, prior day low were rated, and then we have a huge buy side liquidity were drop right there. Stop loss is here below 525.85, and target is around level 428.91 right there. See, and risk reward is 50 cents and $2, so 1 to 4 risk reward ratio right there. So if you look at the 1 hour time frame, you can see it. Wow, you see that it's a good setup right there. Right, let's delete this one for now. 2 cents. So you see this the very typical setup for retracement and turn into reversal. So it's a downtrend, right? You're looking for retracement, and then this retracement going to turn to reversal, and you see that it take all the buy side, right? And hit to a high time frame, supply zones, or in this case I think the auto block 4 hour time frame. Then it go back, it retests. You see it retests the first auto block that propel it to go up right there. So this is a swing low right here. It retests right here one time and twice right here, and this one is very special because it's just barely, it just rate the sell side liquidity from the Friday right there. So this one is very high confluent or high properly set up force right there to go long. You see it's just take the Friday low right there. Let me see what's the Friday low. Right here the Friday low is, oh man, 85. So it's just equal low right there, 85. This one is also 85. Both of them is 85 right there. It's equal right there. You see that? Wow, it goes to our target right there. You see a little bit out of block right here and follow up and retest right there. That's beautiful. And we just put our stop loss to 5 cents below here, which is $4. I mean $425.80. No, actually this low is 91. This one is low is 85. So 6 cents below that. But somehow in the 1 minute time frame we don't see that. 85. Yeah, the low is 81. I mean 91 to 6 cents below. So so we define our target up here. So is that too much? $2 move is too much for Monday. So let's see. I read the book Street Mars by Larry Connors and Linda Breakfast Rasky. they did move the stop loss, so that's the thing that we need to take into consideration, because I remember last time when we modify our rule that we said that we're not going to move a stop loss. So but I read the book and the strategy that they do move the stop loss. But the rule to move the stop loss is still not so sure to me, so I have to reread the decision when they move the stop loss. But the point I want to make is that they do move the stop loss. So this week we have this one. So this week we have some employment number and PMI. I think maybe next week we'll have a consumer index, CPI, is it PMI. October is not a quarter witching like September, June, and March. So far the volume okay, you can go short here. You see the auto block and the fellow gap and the retest right there. So as soon that you say it's open below this high, you can short them right there. So when we go in right here for the long, are we gonna move our stop loss, or are we gonna keep it for now? Yeah, I think we should. If we aim for $1, then we should out by now. And remember, this auto block rate have been retest, so maybe go all the way to retest this auto block. Okay, so if we look on that interesting liquidity run is taking place right now. So right here we anticipate gonna retest this order block. Okay, it did take the sell side liquidity from here, but not from here yet. So let's see. But we can see that it make a right here. It make an equal high right here, 75 to 27, 25 right there is equal high right there. So it set up a sell side liquidity trap. I mean buy side. So let's see how it handled that. That's the equal high. For family time frame today, we'll do a little bit different. We try to incorporate the turtle soup setup, which is look back at 20 candle. So we have look back at 20, and then this is look back at 60, and then we have a look back at 40. So let's see. This is just our initial try. We will try to make it look better, right? Yep. Look like it's the south side, and that's it. Says south side. It rated. What is this one? I think 22 for 22 low. Okay, so this it rate the south side of it, and this can rate the south side. So if we go in here and our stop loss down here, then we're still in the trade. We have a $1 again, but we did not take it. So this is a new low, right, of the last 20 candle. And if it's open below, then we go short, but if open above, then we go long. That's the total setup right there, and it happened around 9:50, right? Okay, let's see if we can apply this. Look back 20. Look, that's it. So this candle is 14110, right? Let's see what is 14110 right there. We don't want to show all, no. Yep. So basically it's a new low of the last 20 candle, and then you see if it open above that, then we go long, right? But if open below that, then we go short. Like sometimes let's do this. Let's do the inverse of this one. It's easy to see. Make a new high, then is close here below that. You see that? Here, this high. Is open below this one, then we go long. So the same idea, go short, same idea when we see this, right? So we know that right here, this is a recent low, right? For the last 20, or in this case maybe more than 20. So if it's open below this low, then we will go short. If we open above, then we go long right away. That's an idea. I think for 27, what's 26, 25. Okay, so around the last 20 candle or so, that's the roughly idea of the total sub right there. We thought that it's a fall breakout. The idea is a fall breakout, right? So anyone who trade breakout say, oh, this level, when it's breakout at level, they will short them, but it did not. It's a fall breakout right there, and that's where we play the total sub right there. Wow, that's beautiful right there. So that's the idea that we try to incorporate in here, in this setup right here, right? As soon as we saw this close above this the first is close above, and then the next candle is close above that, right? It open, it just open above that, then we can go in and go long. That's the total setup right here. Okay, let's do that. This is the new strategy, right? This is a total sub right here. But this total sub is confluent with the ICT concept right here, which is order block right here. But anyway, let's do this one. The basic idea right here is that it's a total sub long setup. So is the reason, right? And this one is, oh, you see that? This is the low at the 9:30. Okay. So what's the idea? The long setup is for 4. It's false breakout, right? That's the idea right there. 4 breaks out. So how we trade that, right? We see that the sell liquidity at 9:30. Were rated by 9:52 by the 9:52, right here. You get the 52 candle right here. Okay, 52 0952. Let Q4 this it. Which is we do the candle number 2 right there. So we check long entry as soon as the candle number 1, right? In this case, open above the sell liquidity at 09:30 right there. As soon as you see open it, then you're going. That's the total setup right here. You see that? So we don't have to rush right here. If we miss the trade right here, it's okay. When we enter right here, remember we did enter right here. Then wait for this. Wait when for it take out the sell liquidity from 9:30, and then the next candle it open above the sell liquidity. Then you know for sure that you're going and go long, and you just put your stop loss 5 cents below that. The the candle number 1 right here. But you see, you also do the retest right here, beautiful retest. So you can add your position in here or the second entry for you right there. Then we put our stop loss is 5 cents below 260, no, not 60, 26, 426.20, right, which is 15 right there. That's it. That's our stop loss right there, and our target is going to be sure sell side degree of the target is the most recent. All they call is a you can call last or most, when we can find better verbiage later, but most recent swing high. which is this one, right? Yep, that's how we are seeing things better now. Beautiful right here. Gives you very precise setup right there. By the way, this setup we learned from this book. It's called Strict Smart. I think Strict Smart by Lauren, but also Lauren is the source for Larry, also something called Larry Corner. And Linda Breakfast Rasky. Yeah, they're talking about I think roughly 20 setup, but one of the first setup is they're talking about it called turtle soup setup, and that's how we try to apply that setup today. You see that it's very precise. You see the self-celebrity set by the candle at 9:30, right? And then you see this candle is the most recent, I mean around 20 minutes or so, right? Because it's 20 candle around there, so it around 20 minutes or so it rate this buy side, I mean sell size, and the next candle it open above that, and you go in and take a long position right away. Don't wait. And you put your stop loss just 5 cents below this, or if you want you would post 5 cents below below this one or below this one. It's very low risk and easy trade right there. That's what we aim for, right? The whole thing is that we try to identify an easy trade. By easy we mean that it's very low risk, high reward ratio, and it's an alpha trade. Remember that trade don't have to be hard. I mean it's hard, but we don't want to force the trades. The idea that we don't want to looking for a setup. We want a setup fire or bring to us. Especially you don't want to chase the market, but you let the market bring the opportunity to you. That's the mindset that we approach. Yep. So if we put right here, we reach our target right there. And let's see how much we gain. Well, let's say we go in right here, right at the high of this candle. We go in right there. Let's say we read right here. Yeah, $1.48. That's a good risk reward ratio right there. Oh man, you know what? I forgot to check the green sauce. I have to do it again. Never mind, let's do it again. Yeah, look at how much we risk. We risk very little, man. Look at that, we risk about 20 cents. That's this. 25, right? 5 cents, you do 20. Now what the low of this one? Okay, just right here. $26.60. What the low of this one? Here, 16.20 or 5 cents. So we know it's gonna take this buy side. Then we should be out of the trade by now. So we don't have to worry about this, retracement right there. Oh man, I cannot believe I have to redo. We have to redo this again. Really? Let's see. Oh no, we're good. Yep, we need to have this screenshot right there. So we good, my friend. So whoever chase right here, right, because chase the trade or short right there, you get a huge, you stop out. That happened. So the risk reward is very, very good. Great. 23 cents. And then you get $1.50. So 1 to 4 or 1 to 5 ratio right there. Yeah, 1 to 5. I mean, what a beautiful scarfing trade right there. I mean, we go in at what? 53 and we get out. It's like 10 minutes. 53, 7 minutes. Yeah, well, kiss me. 13 minutes exactly. All right here. 12 minutes. So basically we held the trade around 10 minutes and we got 1 to 5 risk to reward ratio. What a beautiful trade right there. $10.03, $02.03 if you either stay right there or So the duration, I mean the time that you hold the trade is just about 13 minutes, and you get 1 to 5 ratio. Not so easy trade. If you go in the trade, the easy trade should be working right away. Alpha trade, right? I read the new book by Jack Swagger on the new market wizard. That one of the guy, he just trade effortlessly. Basically he say he in the flow state, he don't have to follow the trades at all. It just effortless. It just come to him easy like that. And that's what our goal right now. We have to tell our brain and our subconscious that the trade should be easy, effortless. Again, the turtle soup setup, in this case, is a long setup. So basically for 20 minutes or 20 candle, we mark the swing low. In this case, we want to go long, right? We mark the swing low, the sell liquidity there, and we see for the next 20 candle, if it go to retest that, and it take the sell liquidity, but it's glow above that, then the next candle, it open above, then going long the way away, and you put 5 cents above the low of that candle. Then you're good for the right there, and your target gonna be this sell liquidity. I mean buy liquidity. I mean spoke right there. That's how powerful and very precise the turtle soup setup. Basically, this setup is play on the breakout trade, right? Anyway, anyone who want to play the breakout, they're gonna follow the short right here, and they got cards right here. So-called for the unexperienced trader, they chase right here, they short right here, they got caught. They got caught right here, and it explode to the upside, and they take the buy sell liquidity right there. And the turtle soup, I believe the best one is around on Monday, right? Let's put that into our note. So turtle soup on Monday. Because on Monday normally it's not gonna move much, right? So it's gonna be always there a forced breakout. If a real move, I think a real move gonna be happen on Tuesday and Wednesday, right? So basically we make an assumption right now, and we're gonna come back and refine our assumption with more statistics and with more number. So here's our write-up, right? Our assumption or thesis. Basically, we say that the turtle soup is often formed on Monday. Why? Because Monday is usually a range day. Basically, Monday not gonna make any huge move. Maybe 80% is range, because the first day of the week, you know, people are not gonna make any commitment, right? Everyone just watch to see how the markets react before they commit. So normally, you know, Monday is a range day, right? Test the water, and that's where the fall breakout gonna take place. It's not gonna break out upside or downside, right? And that where the total soup is very high probability for Monday. So that's our thesis right there. And how do we gonna prove our thesis, right? To prove, you know, our thesis, right? How? Well, we collect the data or statistics to prove or disprove the thesis. Okay, so start from today. We're gonna collect the data to see that the turtle soup is playing very well on Monday. Okay, that's our mission right there. I mean, the same idea right here. If you look at the 5-minute time frame, you can see this is a fall breakout right there, right? Someone, they put the order in when they see it's close above this, right? Then they got stop out. If they put the stop too tight right there, we squeeze them out right there. That's the same idea right there for breakout. But let's see. And this area is the gap, the new week opening gap. You see how the week open right here. That's the gap right there. Hold on, let's make it right here. This is the opening gap that we mark right here. We want to see how the markets, how the liquidity will run around this area, right? We want to see, because this area tells us something. But if you look at ICT concept, you can see this is a bearish breaker, right? Fair value gap displacement, and it just retest into that area and into the fair value gap right there, and you can short them. But this trade is beautiful for us right here, right? Going right here and right there, we're out. We know that you're gonna take this buy side liquidity, because it's the equal height right there. So it's a buy side liquidity trap. That's what Yeah, this is the equal high right there. Yeah, you see the equal high, right? That's a short trade right here, and that's the accent of the scarfing trading right there. You see, it dropped the buy side right here, then boom, go and take it. See that? It take that buy side really drop right there, the equal high right there. And how we know that? We know the total sub setup right here on the last 20 candle or so, on the recent swing low and mark that swing low. And let's see, it may come out and take this sales already. Alright, be right back. Alright, I'm back. So you see, this level is very critical. It bounce back from this level. That's amazing right there. You see that? Level of 426.25. If you look at ICT concept, you see this auto block, failure gap retest, and it still retests at that auto block. So this auto block still valid right there. Alright, we're 10:34 now, so that's 1 more minute. We try to wrap it up this first trading hour for today, Monday. So we look up okay, so we look at the DR model. Right now it's 10:35, so you have a DR model form right now. So you have the DR high, and then implied DR high, and then you have DR low, implied DR low, and here's a mid-range level for DR. Then we want to see okay, in a tight range right now. You see, very tight, not much movement. You see right there, and that's the typical Monday that we're talking about, and that's where the turtle soup is very accurate or very effective, right? There's also a 4 breakout right there. You can short them the second time right there, and yep. So we incorporate that into here. That's which why we have the label right here. Tell us the last 20 candle low and high. So 25.85 right here. The last, is it this one? 20.85. Which one? 20.85. $20 candle. Should be this one. 25, 26, 25. Oh, I think this one. $26. Maybe this one. 25. 85. This one. Low. Let's do the test real quick. We will know. Do the test on my look back 20, because I want to see so let's look this kind of 14.99. Okay, 14.99, right? Okay, and we don't want to show all right now. We just want to show the last 20 candle right there. Oh, so the low is right here. Yeah, 25.9. I want this number match with this, right? It's the last 20 candle swing low right there. If you go with 5 time frame, this is your last 20 candle low right there. Okay, and the last 20 candle high is which is right here. You see that the high of this one is 20 right here. When you see the high right there, look at that high. So that high is 128.10, which is exactly massive number right there. So we add, we try to add into this indicator. This number will march on this number. Okay, but anyway, I think I gotta go now, and thank you for your time, and talk to you later. Bye for now.